Bitcoin and the broader crypto industry is attempting a recovery after a bruising 2 months, with nearly $1 billion in leveraged bets erased with the recent pressure. Hey everyone, I'm Jenny Horn, and this is Crypto Corner right here on Schwab Network. To help us discuss all of the recent volatility, we're joined by Jim Ferraioli, Director of Crypto Research and Strategy at Charles Schwab. Jim, thanks so much for chatting with us today. We've put the month of November behind us, and although it's far too early to say, December has started off on a brighter note. Bitcoin has rallied, of course, above 90,000 after falling to its lowest level since April. What really do you make of this recent recovery?
Hey, Jenny, it's been a whirlwind week in crypto for sure. We kicked off the week Sunday night into Monday morning with Bitcoin falling 9% to $84,000 following hawkish commentary from the BOJ. December 1st, Monday, was the official end of quantitative tightening. And now with about a 97% chance of a rate cut priced into the December 10th FOMC meeting, Bitcoin's clearly rallying. The biggest thing that I want to point out is since the summer, we've seen a drop in spot trading volumes. We've seen flows out of ETFs. Overall positioning in the derivatives markets has gotten pretty bearish. There's more premium in the short term and the long term right now for put options, and perpetual future funding rates are at some of the lowest rates they've been in a year. What that tells me is we're overly negative following a 35% correction. Unless your view is that we're falling into a crypto winter, I feel we're just too down on ourselves right now. The broader macro backdrop is still attractive, and I think that's kind of what we saw yesterday. We saw a short squeeze to the upside following not the news, but the acknowledgement that QT has ended, and we are looking towards a rate cut in a few days from now. So again, I think that's what's put pressure on the upside. But to see a sustainable increase beyond these levels, 94,000 on the upside and maybe the low 80,000s on the downside, we're really going to need to see an increase in on-chain activity. So some of the metrics that I mentioned earlier, an increase in spot trading volumes, you generally want that to confirm your up moves. We want to see transaction fees pick up. We want to see long-term holders who have been selling since August. We want to start to see them accumulating again. And so again, that's what you're going to need for a broader rally beyond kind of this range that we've been trading in.
Walk us through the latest on Ethereum's upgrade and some of the back-end mechanics on that cryptocurrency.
Ethereum just completed the Fusaka upgrade, and that's a pretty big milestone. Looking at Ether, it's trading back at January 2024 levels, and the biggest story for Ether this cycle has been that it's lagged other altcoins. This is largely due to this debate that's in the crypto community about whether Ethereum is scalable enough to grow as a smart contract ecosystem. Smart contract platforms and broadly layer one blockchains face what's called a trilemma. They must balance three different factors: security, decentralization, and scalability. Now you can optimize two at the expense of the third. And so for Ethereum, they've optimized decentralization and security, while scalability, they do lag other competitors. They can process about 15 to 30 transactions per second. And so ultimately, that's led to this scalability debate. How do you really grow a smart contract ecosystem if you're bogged down by low transaction speeds? And that's led to the emergence of competitors such as Solana, which can process very fast transactions. To fix this, several layer 2 blockchains have been launched, and what these do is that they process transactions on their own blockchain, and then they just put the final output onto the Ethereum blockchain. So it's a way to speed up, to make up for that low transaction speed, but the issue is sometimes there's poor connectivity. It's not been that as smooth as users of these layer 2s would hope. And so what this latest upgrade does, it makes for better integration between the layer 2 blockchains and the layer 1, Ethereum ecosystem. And so it's a very good positive. again, I don't expect this to be something that Ethereum should trade up over the next couple of days over, but it does reinforce the long-term appeal of Ethereum. It's the industry standard smart contract platform. It has the leading market share. The only thing it's missing is the scalability. And so if the solutions, the layer two scalability solutions that have been built upon Ethereum's layer one can now interact better with that blockchain, it just makes it more attractive as a player in the smart contract space.
So we know we've seen volatility in this space. I mean, we've seen as much as 10 to 15% swings in both Ethereum and Bitcoin in one single session. I mean, countless times now. So how do you go about navigating this volatility as what is so-called the crypto winter is still looming?
Sure. So it goes back to what I was talking about earlier. Sentiment's really washed out here. I would expect altcoins to continue to be more volatile than Bitcoin, right? That's just how it works. Bitcoin is about 60% of the crypto market cap. So if Bitcoin is moving down, the rest of the market cap tends to be moving down with it in an even, higher multiple. And so the way that I would think about it is you want to be smart. You want to have exposure to the largest blockchain ecosystems. Those are the ones that are going to be the less volatile, similar to stocks, right? Large cap stocks are less volatile than small cap stocks. That's a feature in cryptocurrencies as well. And then broadly, when you think about investing in cryptocurrencies, when you start to move out of the Bitcoins of the world, you want to identify cryptocurrencies with leading market shares, attractive tokenomics, the ones that are scalable or have solutions that make them competitive in that perspective. And ultimately, those are the ones that we've seen value accrue to over time. So you can use this volatility to be opportunistic in the altcoin space and maybe open a position in those that have fallen from their recent highs. But, this is still a very speculative area. And broader portfolio risk management should be the key focus.
Okay, but I like that. Volatility is perhaps an entry point, or at least, some upside if you're looking to get into this space. So we appreciate it. Jim Ferraioli, Director of Crypto Research and Strategy at Charles Schwab. Thank you so much for your insights on crypto markets. And thank you all for tuning in to this week's edition of Crypto Corner. For more crypto-related content, remember to subscribe to the Schwab Network's YouTube channel and be sure to follow us on Instagram, Facebook, and X. That'll do it for us here. I'm Jenny Horn. We'll see you again next week.